and sharing your insight as head of Eagle Enterprises, a security firm. Now we move on to our next news. U.S. and Chinese officials held a second day of trade talks in Stockholm Tuesday, aiming to diffuse the economic tensions and extend a fragile tariff truce before an August 12 deadline. U.S. Treasury Secretary Scott Bessent and China's Vice Premier He Lifeng arrived for meetings at Rosenbad, the Swedish Prime Minister's office. After 5 hours of talks on Monday, no public statements were issued by either side. While major breakthroughs are unlikely, officials may agree to a 90-day extension of the truce, struck in mid-May, a move that could delay a return to triple-digit tariffs threatening global supply chains. Analysts say China holds key leverage through its control of rare earth exports, critical for defense and tech. Meanwhile, the U.S. accuses Beijing of flooding global markets with cheap goods, while China blames U.S. tech controls for stunting growth. The Stockholm talks come just after President Trump has signed a 15% EU tariff deal, easing tensions with Europe but drawing criticism from France and Germany. Now we are joined by Ross Feingold. He's a political analyst, joins us live from Taipei, Taiwan. Thank you, Ross, for joining us. Good to see you. Now, do you think is there a chance that today we will see any breakthrough?
I'm not sure if there'd be any breakthroughs. It's possible that there could be an extension. It's possible that they could reach an agreement on some other up to now intractable, difficult issue. One of the things that's on the agenda, in addition to just what the tariff rates would be, are long-time U.S. concerns with market access for different industries to China, such as financial services, to give but one example. So China has a lot that they could give up in negotiations on the market access side or non-tariff barriers. So it's possible that they could make headway, but again, I'd be cautious about predicting anything that we could call breakthrough.
And Ross, now, do you think that this temporary extension will be enough to address the underlying tensions between them? And what is the obstruction here for them that they are struggling to reach a trade deal?
The underlying tension from the perspective of President Trump and his trade negotiators is the extraordinary trade surplus that China runs with the United States. And just like with other countries or with the European Union, President Trump wants to address countries that have tremendous trade surpluses with the United States. One of his way of doing that is through raising tariff rates. Another way he's trying to address that is by negotiations and convincing these other countries or the EU to buy much more from the United States. And President Trump, to be fair to him, he's been successful in obtaining those commitments from several U.S. trading partners, whether that's to buy more U.S. energy, more U.S. agricultural products. In some cases, countries have committed to buy more U.S.-made weapons. So we know what kind of the broader negotiating parameters are and what the Trump administration wants to address in these talks. And then for China, the U.S. is still an important export market for China, hugely important. And they still want to be able to sell their manufactured goods into the United States, even if they do have to accept the reality that going forward, the tariff that the United States is going to charge on China-made products is significantly higher than it's been in the past.
And Ross, now looking at a bigger picture here, the recent 15% tariff that's been done between President Donald Trump and the EU seems to ease some tensions there. But could this shift in U.S.-EU relations affect the broader U.S.-China trade dynamic?
That's a really good question to ask, and at the moment we simply don't know, because we don't know what kind of deal the U.S. and China are ultimately going to reach with regard to the very large number of issues on their bilateral trade agenda. However, there's no likelihood that the U.S. would give China a tariff as low as 15%. I'd be shocked if the Trump administration agreed to a tariff that low. In some ways, these negotiations are operating on very different tracks. In some ways, there's some overlap. For example, the U.S. wants China to buy more energy. The EU has also agreed to buy more U.S. energy. So how that's going to turn out over time, because there's only so much capacity and there's only so much shipping capacity, for example, that could handle energy exports. So it's possible that going forward, the EU, China might be competing for U.S. energy. So that'll be something to watch. But going forward, what is the U.S. business relationship going to be with China versus the European Union? It's really just too early to say.
And Ross, lastly, do you think there is any card that China can play here to reach a deal? Is there something that can make or break a deal between them?
There are a number of cards that China has. One is the card that China played this spring, which was to restrict the exports of rare earth minerals to the United States. President Trump then heard from CEOs from companies that whose manufacturing processes require these inputs, and a lot of these inputs for now are sourced from China. CEOs were calling President Trump, including in the automotive and other industries, saying we're going to have to shut down production because we don't have rare earths. China has cut off supply. And then as part of the truce between the United States and China, China agreed to resume shipments of those rare earths. So that's one significant card that China has. But again, as I mentioned earlier, another significant card that China has is removing non-tariff barriers and addressing market access issues that have prevented U.S. companies from competing fairly in the Chinese marketplace. One thing we know is that U.S. CEOs are still very eager to do business in China. Even though China's growth has slowed down, it's now hovering around 5% a year when it used to be 8% a year. There's the real estate crisis that's unresolved. But large American companies still think they can make money in China. That's why there's all this talk about President Trump visiting China and bringing a large delegation of CEOs with him. So another card that China has is offering access to the Chinese market to American companies.
One thing that, Ross, they are both eyeing is the compromise on technology transfers. Do you think this will remain a key maybe discussion in the ongoing discussion between China and U.S.?
Secretary of Commerce Lutnick put it in a very easy to understand way a few weeks ago when he was asked in an interview, how come the United States has agreed to allow the resumption of the sale of NVIDIA's H20 chip to China? And Secretary of Commerce Lutnick said it's not the best technology, it's not even the second or third, it's more like the fourth best. And we're comfortable allowing that to be sold to China because then it would increase U.S. reliance on American technology, which is also a point that NVIDIA's CEO, Jensen Huang, has repeatedly made, that, as he likes to say, we want China and other places around the world to rely on the American tech stack, as they call it. So we see kind of the broad parameters here, including in the very difficult tech space, which is that the U.S. government is likely to agree that certain chips and other tech products can be sold to China as long as it's not the latest and the newest and the most advanced.
Thank you very much, Ross Feingold, for joining us as always and sharing your insight as a political analyst. He joined us live from Taipei. Now we move on to our next news. The European Commission has denied claims that its pledge